All right, ladies and gentlemen, welcome to the Daily Closing Bell Report. And we're joined by Jeff Yastine, editor of Newsmax's Financial Intelligence Report newsletter. And Jeff, I guess at the end, the markets were unable to hold their gains. Okay, we've lost Jeff Yastine, so I will tell you if we could put the numbers up right now. Jeff, are you there? Okay, well, you're on now. We have the closing numbers. I was saying that it looks like the markets couldn't hold the gains that they had for most of the day, and they went slightly negative at the end of trading. All right, I guess we don't have Jeff, so I'll just give you the numbers.
That's true. We had the Dow finish down 5 points.
All right, this isn't going to work. So let's okay. The Dow down 5 to close at 17,875. The Nasdaq down 7 to close at 4,910, and the S&P dropped 4 to close at 2,076. Oil was stronger. Earnings are coming up, and everything was rolling along fine for most of the day, as I indicated, until the end, and the stocks failed to hold their gains. Oil hit $52 a barrel today, and new data showing some strengthening of energy demand in Asia, but still, in all, Goldman Sachs said oil prices need to stay low for longer to get U.S. oil production to tail off somewhat and bring more balance to the oil market. And we've seen in the last, obviously, I think it was last July, oil was about 150 a barrel. And, we were down into the 40s. Now we're, as I said today, closing at 52. We also have Goldman Sachs thinking it's a little too early to be bullish on oil overall, though they do see $65 a barrel and a gradual recovery through the start of 2016. So that would be quite a significant increase, an increase of about 30% or so from where we are now, if Goldman Sachs is correct and accurate. Also, an investigative report. Okay, well, let's go to Jeff. I believe we have Jeff back. Jeff, I just talked about oil and what it did today. Well, let's take it back to the beginning. Why couldn't the market hold the gains that they had for most of the day, and why did it end slightly down?
I think this whole thing of bad news being good news is starting to get stretched here. The market is very highly valued by historical, traditional standards. People are very nervous. So even though everybody keeps saying low interest rates, the worse the economy gets or the slower it gets, the longer the Fed stays on the sidelines. Needless to say, there's just a lot of nervous money out there. So we had the Dow up about 100 points in the middle part of the afternoon, and then around 2:30, 3 o'clock, everybody started hitting the sell button, and we faded into the close.
All right, so you were talking to me earlier about stocks were doing well earlier in the day, as you alluded to, on expectations of lower corporate earnings. I thought I knew some stuff about the market, albeit slight. Now you're confusing me.
Yeah, that's where this whole thing starts becoming this through the looking glass analogy. There is a Bank of America strategy team that came out and said corporate earnings in 2015 should be lower when the year ends than what we saw in 2014. That would be the first time that's happened since 2009. But the market initially taking that as a positive because it means theoretically the Federal Reserve will stay on the side.
As you were talking about the bad news being good news, it is crazy. All right, Jeff, sorry we had the technical difficulties. We'll speak to you tomorrow.
Thanks, Steve.
All right, Jeff Yastine, ladies and gentlemen. And by the way, you can find out so much more on the financial news of the day by going to Newsmax.com. And all you have to do is click the finance button at the very top of the page. Newsmax.com, click the finance button at the top of the page, and there's what you'll get, all the information you need. Give Me 5 is next, folks. Don't go away.